This is one way that a lot of traders get in trades that is very, very common and it's really, really profitable. And right here, we can see that we are in an uptrend and priced as done what? A break of structure to the upside, which is this break of structure here. Now, this setup works 90 to 100% of the time. You can see a break of structure to the upside, and right here, we can see price left an inducement. So, this is called an inducement entry. When price pushed up, there were a lot of persons waiting around here to buy these assets, but because of the early buyers, they caused an inducement. So what price does is price will trace back to sweep this inducement or to take away these early buyers and begin to push up. We can also see it here on the sell side. We push down, price try to push up to test this supply zone here, but we can see this rejection and price created an inducement here where it broke structure again to the downside. Breaking structure to the downside, we can see how price came back to push in and took out this inducement. So a lot of traders would have been around here trying to wait for price to sell from here, and their stop loss would be above like this. So price would come, sweep their stop loss and begin to push down. So let's head on to the chart. You can see this trade here. I'm currently in this trade on NZD/USD, and what I can see right here was that we started to form an uptrend, which is higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. But what we got here, we saw how price grabbed this liquidity here and began to push down. Now, this right here, you can see price try to push up just like what we saw here. The price tries to push up to retest this supply zone after breaking this internal structure, but we can see this rejection. So a lot of persons right here waiting to sell their asset from here. You can see a lot of persons try to sell from here, cause a push down. A lot of persons also try to sell from here, cause a push down. And right here, that's where we got this break of structure to the downside, or we can also call it a change in market trend. There's a difference between a break of structure and a change in market trend. Then price pushed down to break structure to downside, leaving this trend line liquidity here. If you draw this line, you can see that it's a trend line liquidity. If you still take it away, you can see we have this inducement around here where price came back to sweep the inducement, retest the supply zone that caused the push down and began to sell. So you can backtest this and tell me how it works. If you're a prop firm trader, I recommend one of the best prop firm, which is Funded Next, that you can trade with. They give the best leverage, they give the best less spread, and they are very, very less manipulative. And they're currently giving a discount for your first purchase and also with amazing offers. So check the link in my bio to get started.